Stocks go down yesterday. You overnight traders can't help yourself, though. You just can't stop buying the dip, and that's what happens here once again. The overnight traders come back and save the day. Market up this morning. NVIDIA, AMD having a day. Lots of other stocks moving higher here. Earnings from MP Materials doing well. Let's rock and roll. It's Friday. Let's have some fun. It's pre-market prep. Let's go, baby.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Well, we got someone new to do the intro.
What happened?
Yeah, I love it, man. I'm
not doing the rundown, though. I'm not doing the rundown. So it's
You're not
back
doing
to
around.
you.
S&P futures trading up 21 3/4 handles, 63.88 1/4. My Friday trend might not come true. You know how we make a higher low for the week on Friday? I don't know. We're 50 handles away from the high, and we're 130 handles off the low. So
Are you challenging this market, Joel? We can't get 50 handles of power today. I'll challenge it too. I don't think so either.
okay. All right, here we go. The buck is flat, TLT flat, USO trying to recover up a little bit. GLD down to $1.23 at 311.89. Silver steady at 34.77, and Bitcoin down about $800. So there's the rundown here, Dennis, and it's a Friday. It's back to the markets ripping overnight.
This is what they do. They rip overnight. We see it continuously happen here. It's a pattern here now that if the stocks go down, they buy them overnight. If the stocks go up, they seem to buy them overnight. So we talked about this earlier this year. The overnight traders relentless. We're starting to see it as a pattern here again, that they just buy the stocks overnight. So why fight that trend? Being long overnight is the way to go. Obviously we specialize in overnight trader over at the Stock Trader Network room there. Lots of the overnight trades working well. Need to start half hedging, I think. We're like not even worrying about short and SPY because they only go up anyway. So might as well just make all the money instead of only part of the money. Joel, earnings though, earnings galore. But before we get to the earnings parade, because there was a pile of them last night, I think we should probably start with this headline. I'm going to take it actually over to Tesla here, because Tesla has multiple headlines here today. It's a stock that we talk about a lot on this show. It's a stock that Adam Jonas is talking about here as well. But last night, Bloomberg breaking an article. Tesla is disbanding its Dojo supercomputer team. Its leader, just giving you some color from that note, its leader will depart the company according to people familiar with the matter. Again, this is coming from Bloomberg. Upending the automaker's effort to develop in-house chips for driverless technology. Peter Bannon, who is heading up Dojo, is leaving, and Chief Executive Officer Elon Musk forced the effort to be shut down, according to people who asked not to be identified discussing internal matters. Team has lost about 20 workers recently to newly formed Density AI. Remaining Dojo workers are being reassigned. Tesla plans to increase its reliance on external technology partners, including NVIDIA and AMD for compute and Samsung for chip manufacturing. So their in-house chip project appears to be dead. If you look last night when Bloomberg broke this article, Tesla lost about $3.03. But the ultimate buy the dip market, they have bought it back here. Somebody who is also buying the dip today is indeed Adam Jonas. He is out bullish here on Tesla once again. We know he's been the eternal bull here for a while. Just trying to grab the Jonas note here too. So it's popped back. It was already popping back last night though, so I don't think Jonas is moving it much now. But Jonas talking about unlocking AI Mojo, $400 price target on it, top pick. I mean, this is where he's at. So he's got.
He didn't give like a best case, worst case, ultimate case.
He always does that. He
didn't do that.
So he'll have a case where it doesn't work out too. That's how Adam Jonas is. But he's been the big Tesla bull out there. So he's popping it back. I think he's not concerned about Dojo being scrapped here. The question now, though, is where's Tesla go from here? Because Tesla, unlike the market, has been just sitting here and basically doing a hell of a lot of nothing all year.
Yeah.
I mean, yes, at the end of 2024, we had the huge run up from 250 to 450, the Trump rally. Then we gave it all back. And then, we had the breakup, the family feud. Stock was up when it wasn't a family feud. Stock went down when the family feud with Trump happened. But if you look really from a technical basis here, we're kind of just sitting here and waiting to figure out which direction we want to go. And I mean, the relative strength has not been great here because the Q's have been going straight up and Tesla really not participating here. Is that concerning? Or does eventually the story of full self-drive, robo-taxis, humanoids, Adam Jonas eventually break us out? Joel, technical thoughts. Tell me what's good about Tesla.
You love it. Then you're going to love this, Dennis, because I've kind of been sticking with this theme, and I'm going to stick with it. And it's the 50-day. That's all you have to pay attention to is the 50-day here. And it's above it, and it holds it, and then it breaks below it, then it comes back to it. So you give me an established bid over this 50-day moving average, which is coming in at like 322.27, then hey, then consolidation will resolve to the upside. But look at the way that blue line, we put this on a while ago, it's just hugging it and
magged it.
Yeah, and it's right there right now. So decide what you want to do. But the trading range in this thing, you're right, Dennis, has just been unbelievable here. I mean, since June, pretty much. I mean, a little bit under 300, a little bit over, 340. But look at all that churning.
It really has. And I mean, this is a stock that has an awesome story. This is a stock that's been bought on the dip. The one thing you have to consider, you can say, the Tesla relative strength has been poor, but the news flow out of the company has been awful. And when stocks don't go down on bad news, and they've had a lot of bad news here, from the Trump breakup to, this European sales disaster, international sales disaster, even domestic sales have not been great here. The stock has been very, very resilient. If they start getting any bits of good news, I think it could go. But maybe Craig Johnson said it best. He's like, we asked him yesterday, obviously from Wedbush, one of the great technicians over there at Piper. And he may have said it best, this is one that's just been sitting here. He drew a triangle on it. He's like, let's wait to see if it breaks out of the top of the triangle or breaks down the bottom of the triangle. I'm like, maybe just play wait and see here. Why worry about, don't worry about missing the first 10% of the move. Maybe you get in after you know that this is the direction it wants to go. And maybe that's what we do on Tesla here too. I still have a core position in the long-term portfolio and the retirement account. But as a trade, I want to be bigger. But again, just sitting here doing nothing. So that's the Tesla talk. You've already moved me on to MP, which I think is a good call. MP Materials been unbelievable. This stock just running and running and running and running and running. It may have had one of the best Julys for a stock ever. $30 to $60 in 3 days. Obviously, government, taking up like parts of the company and stuff helped. But, this rare earth story has gotten really hot. Stock reports earnings last night here. They do indeed beat. Lost 13 cents, supposed to lose 18 cents, 57 million versus 46 million. Yes, million sales. That's how small the sales are here. Stock up $6. Expected move was small here. It was only 5. And I was like, really? MP only a 5-point expected move? I was actually like thinking about, just maybe buying the straddle because it felt like it was underpriced. But in any regard here, it is kind of where the expected move is. It's just slightly above it here right now. It overshot it last night. I mean, the party, stocks making new all-time highs. Hard to be bearish, eh?
Wow, that doesn't make a lot of money. I mean, but
make any really. It loses money, but doesn't even get a lot of sales. It's gonna hopefully get a lot of sales, I think, is what the market's anticipating here as this rare earth story continues to build up.
All I could say is there's someone out there at the 78, 75 area that has some stock to go. Well, they'll get mopped up in the pre-market and we'll go 80, 85, 90. Who knows? But really, that's the only thing I can give you off the 15-minute chart is the pre-market high at 78, 79. It's about $1.49 away from where we're trading.
Other stocks, sympathy ones, which we talk about, USAR, which is USA Rare Earth. That one's pretty liquid. Then you can get into some smaller ones like METC or TMC. Those are both trading higher as well, but those are smaller plays here. The real play has always been in the sector. It's MP. Like they are the player. They are the best in breed. They're a stock that retail and everyone else in the whole world probably will be buying on dips. So if you do get a dip, I'd expect retail to be back in there. And we did get a dip last night on the earnings a little bit there. Got down to about $72 after it ran 80. And that dip quickly got scooped up here too. Stock is loved. The Brandster's here.
Good morning.
What's up?
Good morning, boys. Good morning, pre-market prep. Dennis, thanks for mentioning those sympathy plays there in the rare earth space. I just want to mention that I was doing some pretty decent research on the rare earth magnet plays. Neodymium is your rare earth magnet that is used in aerospace, engineering, all these high precision applications. MP
What's
is
the symbol
the
on that
one. That's like the rare earth actually.
Oh,
Dennis.
that's okay.
Neodymium. Yes.
Okay.
MP is the only player that has definitive access to this thing, neodymium, which is the rare earth magnet. The only other there's companies that have mentioned neodymium. They're exploring mines to find neodymium. They haven't found neodymium yet. The only other play that has direct access to some kind of rare earth magnet is a company called Neocorp. NB is the ticker, November Bravo. They are doing this thing called niobium, which is like a synthetic to neodymium. So I know it's early to get really technical with some of this stuff, but saw an opportunity and wanted to hop in there with a little.
I'm going to write NB down too as a sympathy play then. So I don't have that on my list. Remember?
Yep.
And we talked yesterday about building lists. Like this is how you make money, is having lists and being ready to execute, when the stock in the sector.
And what's the symbol?
November Bravo. Neocorp.
NB.
Yep.
Wait, Dennis, check the volume, Dennis.
I know this is the problem. I write these things down and then they trade by appointment only, but it looks like it trades volume. We're trade 100,000 shares today. So I think I'm okay. That one I had the other day there and I was looking at it, I was like, oh, it's traded like 100 shares today. I was like, I don't want to be the only person trading this thing. So one thing is, as a trader and as a day trader, one thing you always want to do is have, I have a minimum threshold. Usually I look at nothing under 500,000 shares a day. And I really like stocks trading over 1 million shares a day because you know what? You got to get in and out. And if you're sitting there with 50-cent spreads or 5% spreads to get in and out of stocks, you're giving up a lot of edge. So you always want volume. Neodymium. There's a word.
Yes,
for you.
There's a
neodymium.
Thanks, Brandster. Keep
problem.
With good little tidbits.
Cool.
Break in whenever you want. We love tidbits.
Cool. I'm going back into the background.
He's lurking. He's always lurking. Rocket Labs, RKLB. Lots of people looking at this report here from last night. The report was okay. Again, a lot of these companies don't make a hell of a lot of money, but they don't care about that right now. They care about growth. So lost 13 cents, supposed to lose 11 cents, 144 million versus 134 million. That's a kind of a miss on the bottom line. But who cares about the bottom line? You're a growth company. Sales were a nice beat. The guidance, that's kind of wide. So the estimates are up at 149 million. 145 to 155, which is kind of like, we're just going to surround that. We're not necessarily saying we're going to raise guidance here. We're going to say we're going to come around there. And that's good enough, I guess, for Rocket Labs here. I had peeled back a little bit ahead of the report here. Joel's writing on the screen. Can it, just wait. Can it?
This is too big. I need some AI.
Yeah, we're going to get you a better tool. I like that you're writing on the screen now here, but we're definitely going to get you a better tool on writing on the screen. We'll figure that out. TradeStation going to help us with this. We'll talk with TradeStation because they're going to have better tools than this. So can it
take 50%? That's what I'm doing. But it's not too bad. I think it's more me than a tool. The only reason I did that here is this is kind of formations I like to talk about when a stock has a great run, right? And then it has a pullback, and then everyone's thinking, should I have sold this over $50? You get a rebound, 50% comes in right around $48. You didn't get there in the pre-market. So if this is still the trend to trends by Rocket Labs, I expect this stock to get to 48, retake 48, and get back to that all-time high. So I guess it's a lot easier to use the retracement tool than try and write on the screen. But that's not a big number. You can make that a 3 or 4 star in Rocket Labs.
Expedia. The travel trade is back. It was off for a couple days, and now it comes back with a vengeance here. Stock trading up huge in the pre-markets, up 28 points here right now. The earnings were $4.24 versus estimates of $3.90. 3.78 billion versus 3.7 billion. That's a beat on the top. That's a beat on the bottom. The guidance is going up. Not even that much, but enough, I guess. I don't know why it's enough. 4.22 billion to 4.3 billion versus 4.18 billion. I guess people will keep expecting this travel trade to come apart and unravel, and it really hasn't yet. So, Booking was down a little bit on their earnings, but Expedia here ripping up 15%. And it's a funny market. Like sometimes you could take the exact same report, apply it to two stocks, and one will go up and one will go down. And you're like, why? Sometimes it's the bar, and sometimes it's just like, nah, it's just, what we want to do today. It's like the sentiment today. Sentiment, last night, we were buying the dip a little bit last night already here, and Expedia trading higher here. So, and holding on to the gains too, which is an important thing, Joel.
Yeah, I remember one catalyst for this stock, and it was probably like 160, 170 at the time. Remember there was they were talking about Uber might buy it. Do you guys remember that? You probably don't. And I'm like, that doesn't, because that guy, I'm not even going to try and pronounce his last name. I'll just call him Dara.
Sure.
Used to work at Expedia. And but Dennis loves one number. New all-time high, or at the all-time high, 217.72. It's not there right now. It was over 220. If that's your target, if you've been waiting for Expedia to get back to its all-time high, you may have your opportunity today. And I'll just say that the bookings that day when it had earnings, that thing was a monster. I mean, I don't know if we can. I don't know when it was. Maybe if I do this
a couple days ago only.
Yeah, I mean, they got to split the stock. Get on the horn with them and tell them. So let's see if you have a wild day.
Thing now, Joel. Companies don't split their stocks as much as they used to. Lots of people like these thousands of dollars prices there. When the hell was Booking results? It was actually July 29th. So when they came out, and they beat too. And the funny thing is they beat, but the stock did not rally 15% on it. So I don't know why. Sometimes they rally, sometimes they don't. Sometimes you can have the report ahead of time and not even know what the hell to do with it. That's the kind of market that we're in. Wynn Resorts also reported, just going to report it because it's in the same sector kind of here. A little bit of the travel trade. Macau, obviously, different area here. And Wynn Resorts weren't good. $1.09 missed versus $1.26 estimates, 1.74 billion versus 1.73 billion. So casinos, some people are saying Vegas is slower here too. I forget which report was saying that.
Oh, I heard Vegas is like a ghost town.
I don't know if it's that slow. I'm actually going to be out there in October, so I'll be able to go boots on the ground with you, but it's August here right now, so that's a little ways away. I don't know. Like when, this is a tricky one too here because it's a stock that's run up a lot since April, but it's also a stock that is significantly off of its all-time high, and its all-time high is way back in the 200s, like in 2018. So if you look in the long-term chart, we do the Craig Johnson exercise. Let's go out to the monthlies and go to the weeklies. The monthlies, it looks like it's kind of just consolidating and trying to like form some type of a bottom here, which is interesting. So what are your thoughts here, Joel?
Well, Money Mitch mentioned on the pre-market show about potential changes in laws on taxation on gambling and online gambling. There was a wild reaction to the DraftKings report yesterday. I don't know how that's going to help, Wynn and Las Vegas Sands and stuff. I see good support at 105 and pretty decent resistance at 110. The move had been up. It's a long consolidation period, trading lower, but hey, $1.05 looks like pretty good support for me. I wouldn't want to be long. It did take it out in the pre-market. So if that doesn't hold in the regular session, I don't know where you go. The daily lows are really spread apart there for Wynn Resorts. And wow, on the upside too, you do have a good number. I want to give you two numbers because there's a triple top at 108.25. Good levels for Wynn.
Square also reported earnings. Yes, I intentionally call it Square. We're never calling it Block. Stupidest name change in the history of name changes here. I don't know what the hell they're doing. But Square, I even try to always bring up SQ here. I hate that they changed the ticker symbol here to XYZ. What the hell? Like XYZ. Like, it's just the weirdest thing ever. Anyways, the earnings actually missed. 62 cents versus 68 cent estimate. 6.05 billion versus 6.24 billion. So That's a miss for Square on the top. That's a miss for Square on the bottom here. Yet the stock is trading up 8% here today. So what gives? Well, they're raising their guidance to reflect the strength we're seeing across our business, expecting $10.17 billion in gross profit for 2025, 14% year over year, expecting full year adjusting operating income to $0.03 billion, 20%. So guidance raise trumps all. We always talk about this.
Dennis,
it doesn't
watch
matter
your
what
bids.
you did for
I'm
me.
sorry to interrupt you. Watch your bids here. I mean, it's just a slow, steady leak.
Come on in. Come on in. We buy dips. Come on in. Come on in.
Okay.
So bottom line, XYZ trading up because the guidance raised. Now, stock has come $45 back in May to now $82 here. I feel like if you are chasing, it's worked a few times here, but it isn't working that great. So I'm going to lay off the chase of the XYZ.
Let's see. I mean, mixed bag, right? Miss, but up guidance. Let's see if you can hold 82.18. That was the high of the move from last week. You've exceeded that in the pre-market, going all the way to 85.75. And someone said, wait a second. You're not filling that gap on me at 84.70. And they came back in. So at the high of the move, let's see if it can hold it.
Yep, steady leak in the market here. We'll cover the markets here in just a second, but we got a few other ones. We want to go to a couple disaster stocks of the day because they're fun. And you know what else they do? They give us opportunities for dead cat bounces in the overnight sessions there. But Trade Desk.
Wow.
Trade the desk, as Brentster calls it now. I like that. Trade the desk.
Does he?
Trade.
When did he start?
Yeah, I know. He started that last night. He said, trade the desk. And I was like laughing out loud. I was like, we got a new name for this company here. Not the Trade Desk. Trade the desk. I like Trade the Desk much better than the Trade Desk. Maybe that's what they should do. Maybe the stock be up 30% if they change their name. Trade the Desk is trading down 32%. I'm like, holy cow. I look at this report and I was like, was it really this bad? 41 cents versus 41 cents, 694 million versus 684 million. So that's an inline earnings report. And that's a beat on the bottom line, but the Q3 revenue is expected to be around 717 million, which is slightly lower than some of the street's expectations, but not even that low. Doesn't matter. Trade the desk had a high bar. Trade the desk no longer has a high bar. The stock is crushed, down 32% here right now. Stocks fall this much on an earnings report, they usually don't bounce right back.
I love Gerald's comment because it was the exact thing that I was thinking. Good thing they got put in the S&P 500.
Did they?
Yes.
Did Trade the Desk go in?
Yes.
I forgot.
Yes.
Wow.
And I think they're taking it out today.
It's gone. They're eliminating it back.
Can you believe that?
I believe everything.
I don't know what to tell you.
Trade the desk.
I think if you're long this thing, you're hiding under your desk.
Maybe.
I don't know if you wanted to buy this thing at 60, go right ahead. Oh, look at that! It's a gap fill here from I don't know that it was added to the S&P later. I don't know what that gap was from about. But hey, if you were waiting to buy this at 60, here's your opportunity. Just hanging out at the pre-market low. Step down sellers. S&P buyers are just getting jammed in this one, down 32%.
Your other disaster stock of the day is going to be Sizzle. It is not Sizzling anymore. It is down 21% here on its earnings reports, which was pretty good as well. 78 cents versus 58 cents, 98.7 million versus 94.9 million. So it's a beat on the top. It's a beat on the bottom. I don't know. It's sizzling out. Stocks just, run too far. $40 back in April, went to $186. Just stock went up 400% in 3 months. It's sizzling out. That's what's happening here. Now, is there a point in time where they're going to come in and rebuy this? Maybe. But I'm not going to be the hero and say the bottom is today. It's down 30.
It was down under. Well, you could have got this thing in double digits, Dennis. This thing went under $100.
It's already bought the dip.
Yeah. Already bought the dip. So when I see a bounce off a pre-market level like that, I mean, of course you got to be leery, right? Because all the people that bought there, they don't care about this thing ever going back to 139.33. They're just like, whatever I can get, I'll just put my offer out there. I'll scalp out of this thing. So your recovery high has been 113.68. Minor, that's a half a star, and I'll give you a half a star if we start to go to retreat. Your next daily low coming and playing the regular session is 106.15. Those are half star levels. This is not financial advice, but this is probably over the expected move. In Sizzle is fizzling out.
We could cover earnings for 2 hours here because there was so many companies that reported last night. If you have a specific company that you want to cover, let us know. We've got a couple other major ones we do have to cover. Penn Interest, Joel, Penn's trading down 12% here on its report. I don't even know anybody uses Pinterest anymore. I'm like surprised like that the stock has been as strong as it is. Like my wife used to sit on there and she'd pin everything and we're looking at this and looking at that. And she doesn't pin anything anymore. She's always on TikTok. So I have no idea why Pinterest continues to, outperform here. I don't get that anybody uses it. But anyways, the numbers are okay. So there's got to be some people using it somewhere. The earnings missed though, 33 cents versus 35 cents. 998 million versus 974 million. So it's a miss in the bottom, a beat on the top. They had more users than ever before, apparently. So the users are pretty good there. But sales just in line, 1.03 billion to 1.05 billion. Analyst estimates were 1.02 billion. So nothing great out of this report. I just think the story here is old. I think the story is cold here. I think this isn't the place where I want to be.
Who's the big boy that was in this one?
Elliott. I think they're still in there.
Yeah, they're still in there.
I'm not 100% certain that they're still in there, but I think they might still be in there.
Well, down $5.
Elliott gets in there, you get the Elliott floor. So, you get that Elliott floor in there, and the Elliott floor is like a 25. We've been down there multiple times. Elliott's been in there for years now. 39, it's a long ways off the Elliott floor. 34, still off the Elliott floor.
Well, the algos that got, as Dennis would say, antsy in their pantsy, took it down to 31.79. So the buy the dip has already taken place at this point. And now the regular traders, the traders that were saying, man, I really wanted this thing between, 33.70 and 34, all back here in this area. You had 1, 2, 3, 4 lows in that area. They're saying, hey, I kind of wanted it at 34. I missed a pre-market low. So that's a decent area of support. The only word of caution here, not really bouncing. It's like, oh, it's 34. Yeah, there's a bid here, but it's like 15 cents away from it. So hard to give it a good number. We'll see what happens at this 33.70, 34 area.
It's kind of had the continuous leak. So
yeah,
not really bouncing,
Nope.
Is like it's still leaking. So I think, you're looking for these bounces, you need them to stop leaking here. They want Soundhound. They all want Soundhound.
Really?
They were chanting Soundhound in the chat. Oh, yeah, this is a stock that's loved by a lot of people. And looking, you know what? Hey, stock's having a pretty darn good day, up 26% here. The Soundhound is Soundhound AI. I had to add that afterwards just to make sure you knew it was an AI stock. Lost 3 cents, supposed to lose 9 cents. I lose money, but nobody cares about the losing money because they got the sexy Soundhound AI name now. I'm going to ignore the reporter calling me. 42 million versus 32 million. Soundhound AI raises sales guidance from 157 to 177 million to 160 to 178 million. So they bump it up just slightly the bottom and then slightly the top. So it's an ever so slight, but they know if you raise guidance, the algos love it. And the algos are loving Soundhound here this morning. It's up 26%.
The algos are loving it. The retail's loving it. And the sellers here, this is the gap area too. Hold a bid right here, right now, right where we're at. 13.56 was the former high of the move. You took a couple pokes at it back in early July. It's also going up to fill the gap at 14. So let's see if the retail Reddit Wall Street Bets PMP crowd can take this up from 13.60 to 14. But that's a big move in Soundhound, trading up 288.
There's a steady leak here in this market here. Steady as she goes. I don't see a catalyst. Brentster's looking in the background here. We're just leaking, Joel. Ever so slightly. Steady leak.
Well,
Tim Quast waiting 3 minutes.
Brent came up with the earnings Chopfest, but to me, it's like we're churning during earnings here. I mean, we've had some good days this week. Yesterday, I don't really know if you could call it a bad day, but we did sell off on 90 handles from the intraday high, and then we floated back up. So we're churning. We're churning. It's a chop fest here.
And it continues. So, okay. One more earnings before we get Tim here. He's going to be coming on in a minute here. Going to go to Take-Two. The video game maker. Trading up 5% here on its earnings report here. Take-Two is always steady as she goes. This is one of those steady as she goes. Even during COVID. Remember, this is only stock going up because they were staying home playing video games. Take-Two. Earnings. $1.42 billion versus $1.3 billion to beat on the sales. Earnings bottom line, okay. Guidance raises. I don't know. It's supposed to lose money here. I was like, usually Take-Two makes money, but maybe the Q2 is a tough quarter here or something. But they're raising their guidance here, but they're supposed to still lose 279 to 245. They're only going to lose up to 240 to 205. And the analyst estimates are supposed to lose 246. So I don't know what all that means. But anyways, bottom line is they beat 61 cents. Maybe next quarter is going to be rough for some reason here or whatever. But they don't care. Sales guidance went up too. So Take-Two trading up 5% here. Lots of resistance up at 240 though.
Any updates on when Grand Theft Larceny is going to be out? No updates on that? I mean,
yeah, we have a definitive date. I believe it is May of 2026, but let me confirm. We do have a definitive date. As far as I'm remembering it, the initial season that they gave was fall. And then when we had that headline, I don't know, maybe a few months ago that it was delayed, I believe it was delayed into 2026, but let me double, triple, quadruple check that. But Joel, you are smart to take the discussion there because that's everything for Take-Two.
240 area is an area of interest to me if I was long this stock. I mean, you came up to 240 a couple times earlier in July. Pre-market high is in the, above 240, 241. You're $3 off it. So it's back up to a former resistance point. That's a nice move in Take-Two. Have we looked at EA in a while? No, we haven't talked about the. Oh, EA a little bit.
It's always the second best, though. It seems like it's been moving up here lately, but Take-Two is always best of breed, and EA kind of just always has lagged. But it's kind of coming back too. These are ultimate buy the dip stocks too. These things keep coming back. So when they do dip on game delay or something like that, those seem to always be buys here too. And eventually you look back at these stocks and they come back. I mean, EA is not quite back to its 2024 highs when it was up at $170, but it's darn close.
All right, we sneak one
Tim's
more
coming
in
on
here
in 1 minute here. Earnings this morning. We got Fubo if you want Fubo. We also got Under Armour. Let's stop and talk retail here for just 1 minute here because retail has started to turn back into a bit of a disaster here. Yes, there's been some decent stories within retail, but there's also been the Lululemon story, which just relentlessly goes lower,
Lord.
like every day. It's like the trick. It's every day. Lululemon sometimes pops overnight and they sell it all day. I mean, this stock just will not stop going down. It has went from growth to value. And the reason I talk Lulu with Under Armour, because I used to pair trade those things together, but Lulu was its own little thing, and Under Armour obviously has continued to fall down here too. I think Lululemon is following the Under Armour story, where you once upon a time had a 45 PE. You were the retail darling. Everybody was wearing Under Armour clothes, all the athletes, all the people who wanted to be athletes. It was the thing. And then the story cooled off, and it never got hot again. That was Under Armour. Has Lululemon now become the new Under Armour? I'm going to ask Tim Quast this too. We might as well bring him into the conversation, Brent, live, because I'm going to ask Tim Quast this question as well. So let's bring in Tim. here he is, coming to you live from coming to you live from nowhere apparently because his
camera just cut out. Maybe
he was right there. He was ready to give us the answer to my question of whether Lululemon's going to be Under Armour, but his camera just cut out. So we'll get.
Can we hear him?
Tim said he messaged me and said, "Hang on, guys." So give him a sec here. He was just
give him a second here. Okay, I'm going to answer my own. Joel, you answer the question.
You know what?
Who is Lululemon the new Under Armour? Is it going to follow this path of destruction that Under Armour had? Or is it going to be a Celsius comeback story eventually? Chad, I'm asking you too.
Great analogies there, Dennis, by the way. Go ahead, Joel.
I don't know. What's there to say? I mean, the stock's going down. You're coming back to levels you were at in 2020. You're coming back down to
5 years of gains.
177.77. I don't know. You know we got to dig up Aaron Bray. Remember, he was AB was on this one. If he bought the dip, I hope he sold that ripped. Unannounced 2-for-1 stock split since the beginning of the year. Hands off for me on the long side.
Bring in Tim.
All right, let's try the intro one more time. Here we go.
Instant replay with Tim Quast, who is now camera is fixed, ready. The sun is just coming up over those mountains out there, and Tim.
Oh no, Tim!
Again.
Tim,
dang it!
I talked too long. We could have got the answer in that 5 seconds that I blabbed my mouth with the awesome. He never has any problems. To go press
something.
He never has any problems. Oh my gosh, I saw him and everything, and I was so excited to get into the market structure. I was so excited to get into the supply and demand. I was so excited to get the answer to my question: is Lululemon the next Under Armour? Brent, you never answered the question. Do you think Lululemon is the next Under Armour, or does Lululemon pull Celsius and turn itself around?
I mean, I think they've always, from like an apparel perspective, from like a sort of quote fashion perspective, I think they've always kind of been the same companies. So, I know that the stocks have acted differently, but I think it is. I think Lululemon could be a next Under Armour. Yes.
Oh, wow. That's a terrible thing, because what happens here is, again, just using the analogy, Under Armour is trading with a 50 PE at one point in time, and the earnings have gone up over time, but the multiple has contracted significantly as the growth has contracted as well. And obviously, Under Armour sit like at 8 or 9 year lows here now. But if we just go out and look at our details, and look at, where the PE is. Under Armour's PE has been down as much as 11 or 12, but the earnings have come down now, so the PE is starting to go back up. So the PE is actually up to 20. Lululemon, which carried a PE a year and a half ago of over 40, is now 12 times forward earnings. Yes, 12. No, not 20, not 30, not 40, 12 times earnings. Lululemon is now at ridiculously value levels. If you think the story could potentially turn around, the stock is dirt cheap. If you think the story is over and going a la Under Armour and people have moved on to bigger and better things and are done paying $100 for their yoga pants, then this story could go a lot uglier here. So that's where we stand. And we're not going to do a guest intro. We're just going to add him to the stage as quickly as possible here and just see if his camera is going to survive. Mr. Tim Quast, how are you?
Well, thank you, guys. It's been a long time. Sorry, I had to. Now it looks like I'm peering down on you because I had to swap devices. But
that's okay.
We were foiled temporarily, but only temporarily. Nice to see you.
Nice to see you too. Are you going to be able to show us Market Structure Edge here on this computer, or did you have to switch devices altogether?
I should be able to. I think we can do it.
He's going to bring it up.
Real quick, how was the Top House? How was the Top House concert? I've never heard of Top House. How was it?
It was a total surprise. It's we have this concert series up here in Steamboat Springs called Strings, coincidentally, and so we do this as much as we can. And so we had no idea who Top House was. In fact, I was saying to Karen, we probably should be listening to Top House on Spotify before we go to this concert, but it was too late. So we go, and they're just unbelievable. They're fabulous. So
Nice.
I give a rousing endorsement to data only, not advice, only data. On Top House, I think Top House is an absolutely fantastic band. I call them, I mean, they're a bluegrass band, but it's a fusion band. It's not just bluegrass, and they are funny. It's like stand-up comedy and music, but virtuoso music. So there's your tip. Like that, only on pre-market prep will you hear that.
Top
Brad,
House.
have you heard
I'm
of
definitely looking Top House up, Tim.
Okay.
Thanks for that.
We're all looking it up right now. Everybody's Googling in the background Top House. Tim, if you want to see if you can show your screen here, that would be great. And we'll jump into supply demand. Market strategy.
Let's see if I can keep from screwing it up. Okay, hang on here.
Hey Tim, if anything, have a nice weekend.
Thank you.
It just pressed the button and boom, the 10 cameras are gone.
Okay.
That sun came up a lot in the background. Holy cow, it rises fast back there. You were dim like a minute ago. And now it's like bang.
It's happening. That's right.
The sun rises faster out there. I did not realize.
That's Emerald Mountain behind me. We walk up that almost every day. It's that's at it's not that high. That's about 9,000 feet at the top. So is there
any emeralds there?
I have not found any. There are a lot of bears out there. A lot of bears out there. Okay, so here we are. Okay, now I missed, Dennis, what you asked me to look at here.
Well, I was asking about Lululemon because this has been the most awful story of the year. One of the worst performers in the S&P 500. I think it's the 5th worst performer in the S&P 500 out of the 500 stocks. It's down like basically 50% this year. And the stock just seemingly goes down every day. And I'm like looking at it, I was like, one day it's going to bottom, but I don't know what day it is. And then I think to myself, well, it might just be Under Armour and maybe never bottoms. But I want to get, any thoughts of like hints of like potentially turning the story around or just stay away here. What's market structure edge say?
Let's have a look. And by the way, I love my Lululemon pants and I've got Lululemon shirts. This is a Lululemon, as a matter of fact. I mean, it's great stuff. They make awesome products, but that is not what determines. It's a great lesson for traders how stocks will behave. The simplest thing, traders, to me, this is a year-to-date look. So what you're looking at, this stuff that just looks like goop, is demand in green. And if you're colorblind, it's, there's a line.
That's Joel.
And then there's an area chart. So the line is price. This is taking closing price, and it's year-to-date, and obviously it's come steadily down. Green tells, when demand is good, the price rises. Only these periods where demand was good did price rise. If demand is weak, if it's below 5, which is an important theme right now, it's not going to do well. This is supply, Reg SHO, Rule 201, short volume data. If you have high supply, over 50%, and weak demand, the price is going to decline. It's a great thing to sell calls on, right? Because you'll keep the premium. But the lesson, traders, is no matter how much you may like something, how much I could tell you that Lululemon makes great stuff. Here in Steamboat Springs, we have a Lululemon store over on Lincoln, the Main Street. That won't make your investment good. You need excess demand for stocks to perform well. That's your takeaway. And Dennis, unless and until, what would tell us that condition is going to change? Well, the good news here is supply has dropped to 43%, well below. That's basically 20% below the levels in the S&P 500. If we got sustained good demand and sustained low supply, I would buy it. But that condition doesn't yet exist.
There's just no demand.
Yes, right. And you say, well, why? Why is that? Well, it comes back to a great lesson about the market. 10% of volume comes from fundamentals. 90% of market volume is something else. And if it is not index worthy, if it isn't something that goes in the basket for ETFs and index funds, BlackRock, Vanguard, State Street, Geode, Morgan Stanley, JP Morgan, UBS, they're 70% of the assets at those firms, and it's $50 trillion. Take the equity components less than that, of course. is running on models. And this thing is not in those models. Why? Because it is not hewing to the benchmark. If you don't track the benchmark, you're out of the basket. And that's a lesson for public companies. Public companies, you should be focused on what keeps you in the basket. Stop doing this crap on CNBC where you're talking about how you're trying to differentiate yourself. That's how you will get sorted from the herd and set upon by hyenas. That's not the way to approach a market where 90% of the volume comes from something other than your story. And for traders, doesn't matter how much you think something should rise. If it's departing from the herd, it won't.
This is such an important conversation. It's something that we talk a lot about on Pre-Market Prep and on Stock Trader Network in the room here. It's just ETF effects.
Yep.
And I mean, is there any more dominant force in this market right now than ETF effects? And not even right now. I mean, this has been for years. Like, you know, I see it, you know, on a day that Meta is killing earnings and Microsoft is gapping up. And then you see all of a sudden T-Mobile tanks and Gilead tanks and CSX and MAR and AstraZeneca all tank. And you're like, why are these stocks tanking on this Meta and Microsoft? It's ETF effects. Because there's such big components in the Qs. They had all those non-tech components in the QQQs. Absolutely nothing to do with their fundamentals, but just ETF effects. And, you know, this is just the most underrated thing in the market that people don't talk about. You never hear anyone on CNBC come on and talk about ETF effects. Zero people talking about it. But it's the biggest driver of everything. Is it not, Tim?
Absolutely. You know, the one little, and of course he's retired. I could give a nod to Bob Pisani, who earlier this week posted on X that 97% of stock pickers over the last 20 years failed to beat the benchmark. So why are you using stock pickers? He's getting that information from Morningstar, and we track that same data, the passive active barometer. But we know a lot about the ETF market. There are 4,000 ETFs traded in the U.S. equity market. Half of those are equity. They gathered $2 trillion of assets just in the last year. A lot of that's conversions. You know, the Vanguard had a patent on issuing a class of shares against its index funds that would trade as an ETF, and it expired. So now everybody's doing that. And if you look at the concentration, you know, I've talked to Tidal, which is a huge TIDAL. You can look them up. They are a platform for people who want to launch ETFs. They provide, it's almost like, you know, somebody doing incorporation for you. You know, you meet all the regulations, do the distributions, the legal requirements, the filings, they'll do all that for you. Well, you know, I've talked with those people and they said 90% of assets in ETFs are large caps, and it creates this concentration. And if something shifts, if it's not Lilly or, you know, pick your AstraZeneca, pick your thing, and it's this basket, that's where the money's going to go. Look at this mega cap portfolio. This is just stocks with 100 billion or more of market cap. There are 129 of them. Obviously, tech leads. Machines are the price setter. You know, just drop below 5, by the way. I mean, look at the supply side. But this is 76% of market cap. It's $50 trillion in 129 stocks. And it's the ETF effect. Everybody wants the basket that tracks the benchmark. It's why you have a very difficult time, investors, matching the benchmark, because you're unlikely to have the same stuff they have in the basket. And they just get rid of stuff. We run quantitative models. We offer a focus momentum portfolio. It's up 35% this year.
Nice.
By having a constantly changing little basket. It's not designed for institutions, it's designed for retail, 5 stocks. But every day that thing's going to take something out of the basket and put something else in. And it's the way that you beat the market. That's what ETFs do. And people getting those returns are BlackRock, not necessarily you and me. But it is dominant. There are $830 billion of creations and redemptions in ETFs every single month. That's what's occurring. And it has a sloshing effect in the market. And you're right. People do not understand it.
Let's look at that momentum sentiment, and you see 11 stocks in there. So we've got some momentum. What's in there?
But that's down. I mean, we've been running very steadily 20 in this. portfolio.
So this is down.
So this is down. And if you look what's in here, you know, there are going to be some familiar names. That's actually a client of ours, Insmed. You know, no surprise to see IONS, Firm, Arista. There's a great, you know, that's in the Focus Momentum portfolio. But it's, you know, it's an interesting mix, but primarily, I mean, look at the market cap. That's what I meant. Here's an interesting thing. The largest stock in this is Arista, or Arista, if you prefer.
Yeah.
But now, so this tells us we could be coming to the end of momentum. Why? Sorry, I forgot to close that. Why? Because the number of smaller market cap names showing up in here has increased sharply. That tends to be toward the end of a momentum run. Now, I don't know what's going to happen, right? You know, I think I always say you want to look at demand and supply. This is the broad market, and demand has been awesome. I mean, it's been above 5 since April. But here's where we are. You know, we're right at the center line, 5.0. Supply has risen, but it peaked yesterday. I don't know what it's going to do next. When this breaks down, that's when the run is over. Is it going to happen? I don't know. Well, you know, you just take what the data give you every day.
Jump into one stock in there, specifically Affirm, because this stock, Money Mitch was talking about it this morning here too, has just been in monster mode here. And it's funny because Upstart actually reported disappointing earnings. I knocked Affirm down for about a second and then kept it going higher here. Is this whole buy now, pay later theme for real? Thoughts, concerns here? Affirm.
Well, this is a classic demand supply divergence. So the green part of the graph is rising and the supply side is falling. Those are classic conditions. Traders, you can go, you know, that's what you look for. You look for standard deviation of, let's call it 2 or 3 between demand and supply, and you're going to find that's a search you can do. That's going to give you returns. When that condition breaks down, then you leave. But as to the business of buy now, pay later, I mean, it's just Affirm's doing a great job. And what Affirm would argue is we're in a sense better than credit cards because we're helping you use your cash flow rather than letting you extend your debt. And there's merit to that. The problem is people are, you know, they've got both. I don't know how this is all going to turn out, Dennis, but I think it's you know, it's not necessarily a good thing when you're buying your groceries on time or buying your utilities.
We'll pay for the groceries next month. We'll pay for the groceries next year.
It's right out of Popeye, right? I will gladly pay you tomorrow for a hamburger today.
That's true, actually. The Popeye model, they made some money with that, Tim.
They did. Yeah, that's right.
And if anybody's got any stocks they want Tim to cover specifically in Market Structure Edge, we'll keep them on for a couple more minutes. We like to do a little bit of ticker time with you here, Tim, as well.
And I've got an idea. Let me show you something really quickly. Could you know that, you know, Lily's down 14-15%. And then, you know, the news isn't bad. It's about bets. The market is dominated by quantitative leveraged bets. And that's coming from alt data. So, you know, hedge funds are going to go consume all the available data and they're going to know whether there is going to be an upside or downside opportunity. They're going to have a high probability bet. And you can often see this right here. This would be July options expirations. So that far back, quantitative hedge funds like World Quant bet short. So you can see that on the supply side. This thing can have an impact all the way here. And if you contrast, let's look at Arista Networks. You can see that, and it's not perfect traders, but it gives you a pretty good idea. Oh, there it is, sorry. It gives you a pretty good idea which way that money that is consuming every conceivable data set is going to go. And here you see the opposite. See, this is very low. So we know that the counterparties to the bets that are being placed were hedging themselves long. And that tells you, okay, it doesn't mean they're going to be right. And you say, well, why wouldn't this short bet play out? Because there's not enough asset associated with daily or weekly options to move the needle. The monthlies matter because there's actual movement in the underlying asset, the stock. So you got to watch that stuff. So if you have very strong demand at 10, I mean, it's been at 10 forever. And then you have these big leverage long bets, which direction probably is the stock going to go when they report results? Well, probably up. It's not perfect, but you can always go look at that and have some idea of which way things might go.
Tim, we're going to get to tickers in a second here, but I gotta ask you the questions why that you put in the outline.
Yeah.
Why do futures mislead investors?
It's because the aim of the money outside market hours, I wasn't prepared for this, so I don't have all that stuff shut down, with apologies, everybody, that I'd swapped to this machine. That money outside market hours, global 24-hour trade, I do it too. You guys probably do too. It's pretty easy to trade outside market hours, isn't it? I mean, I love it. Right. You can fill, there's a surprising amount of liquidity. It's the direction the market is going. But a lot of what is occurring before the market opens is an effort to get people to tip the wrong way. It's obfuscation. You can't buy what the futures market is showing because there are machines that are consuming all the data globally. Citadel knows what's happening in the European markets, the Asian markets, the Asia Pacific markets, everything, everywhere. And they also know that 70% of the market cap globally is in the US, and it needs the reference price in the last 15 minutes of the market. Well, how much can we move people to get them to tip and to create gaps and arbitrage opportunities? Yeah. That is what is occurring. Don't trust it. And you got to look at demand and supply. If demand and supply are converging in the broad market and futures are way up, the probability that it holds is very small. It doesn't mean it won't. I'm not saying the market will tip over today, but it might. If you look at the demand supply balance, it suggests that it's possible. And if you look at the underlying stocks of the S&P 500, the last 3 days, there was net selling. Everything closed below the midpoint for 3 straight days. You don't see that if you're just looking at the futures contract called the S&P 500 or whatever.
Tickers, HUD. Richard wants HUD.
What you got?
Richard wants HUD. HOOD. Sorry.
Oh, sorry. Oh, my man Steve Quirk, global head of brokerage at Robinhood. He's a good fella. So let's see. It's been an extraordinary run. Sorry.
Yes, it has.
Yeah. It has been one of the most remarkable stories really in the markets. I'm going to back this up so you can see how long. That's what you look for, folks, right here before I change that. See this?
Yeah.
If it's hammering 10 until that breaks down, you're going to have upside. And then everybody covered right here. So that gave us a little more stability. I would look at this now and say, well, is the trend breaking down? I don't know. It's a 5 now with rising supply that tends to begin to undermine performance, but it is, I'm just going to back up to year to date again. If you have X, there's your lesson. And this is simple stuff. So long as you have excess demand, at least 5, stocks have a propensity to do very well. If it drops below 5, we'll just sit out. You could wait this whole time. You get right here, okay, a little bit of a gain maybe, but then supply is very high. Well, leave that. Now you just stay in here as long as it's above 5. And it's not perfect. You're going to miss something here and there, but generally that's going to be very effective.
We got AAMC just dropped us $5. $5 tips go first. Roblox, RBLX.
Yeah, Dave.
That's the way to skip the queue. That's how you just skip the queue.
Right, Roblox.
Pay to skip the queue, just like Citadel. That business model is just head scratching to me. And I've got friends, very good friends. In fact, I'm going on a sailing trip in a couple of weeks in Tahiti with these friends. Their daughter, who's a youngster, millennial, was making money hand over fist as a strategy person at Roblox. And it's the most head-scratching business model in the world to me. but it works, right? How can you have fake money and make real money? Well, they do it, don't they? It's a remarkable thing. But and again, you look at this right away, you would say, well, it's not the same pattern as Robinhood, but look how it's not dropped below 5, right? It's
Always. And there you go. You could, as a trader or an investor, so long you could check every day and go, well, as long as it's above 5, that matters most. Then secondarily, you look at the supply side. Look, the supply side is not as good a signal because the market is so dependent on created liquidity. If you go to buy something and you're buying it at the market, where's that supply coming from? Well, 9 out of 10 times it's not coming from some seller like BlackRock. It's coming from some market maker like Citadel, who manufactures stock, exemptions to short locate rules to fill your trade. Well, they're going to have to square that ahead, and they'll get it because they're only risking about 1/10 of a penny. But you look at this, remains very good. I mean, is this supply trend good? No. Could break down. It's why the stock has kind of lost some of its momentum. But, excess demand, always the takeaway.
Okay, Tim, extended session there. We love it. Market Structure Edge, Tim Quast joining us here. Tim, we got to do a longer segment with you next time. You let us know when you're done.
Oh, stop. We got another tip. Bring it back.
Oh, what? We're going to pay the bills.
We're going to pay the bills here.
Okay.
Whole enchilada just dropped to $5 for
no,
Accenture.
$4.99.
We can make a business here, Tim. We can make a business here. ACN.
Okay. Accenture.
We'll keep going. You keep dropping 5s. We'll keep going.
Yeah,
here.
we'll keep going.
And by the way, you can sign up to get our market desk notes free. And it's our market strategist, Brian Wilson, or me.
You don't have to drop 5s. It's pre-market prep.
You can do it. You can, you just go to marketstructureedge.com, sign up for the market that's free. And not forever, but you can do it for a while. So here you right away, right? It doesn't take a genius to look at this to understand what's the problem for Accenture. It's not above 5, right? There is no demand. And unless that changes, avoid it. Pretty simple. Why is this the case? Because right now, Accenture is generally a value stock, and the market at the moment wants momentum.
Okay, that's an ugly looking chart here.
It is ugly, right?
Yeah. Okay, Tim. All right. Thanks for joining us. And marketstructureedge.com. Tim Quast, always a great guest on the show. Thanks, Tim.
Always fun to see you guys. Thank you.
Thanks, Tim.
9:03. We know where we need to be. That's over at the Stock Trader Network. Folks, tune in Monday. New guest. We had a great guest from Piper Sandler on yesterday, Craig Johnson. Well, I've heard nothing but rave reviews about our guest on Monday, Danny Krasnick. He runs the options over there at Piper. And you know what? I should have saved this shirt for Monday. I got another one that says Michigan. He's a Michigan man. He'll be on Monday. Folks, thanks for joining us here on PreMarket.